Today is September 19th, 2011, and we're doing a brief review of the market activity over the last week and setting some expectations moving forward. Last week was pretty solid. We opened at 1153.50, closed at 1215.76 for a weekly gain of just a shade under 5.4%, which by most people's recollection would be a pretty good week. However, in the greater context of things, the question is, where does this put this in the market? And as you can see, the open down was significantly down today, even though we did manage to recover from some of that. We finished down and erased most of Friday. And what I wanted to show you is where this is setting up in the bigger picture. In order to do that, we need to look at the bigger picture. So if we go back on a weekly basis and look back all the way into 2006, we had a high point that was in October of 2007 and then a low in March of 2009. And you can see from our peak to our trough, I've set up a couple of these shaded bars here, and I've also shaded in some areas of retracement. So using Fibonacci retracement, we have a 23.6% retracement, 38.2, 50%, and 61.8 on here. And what you can see is that this is a moving average. So this is a 21-day moving average, and it basically follows all the way down and then starts to set up and rides around in these channels, gets a little bit higher, but has come back around this point again. This is on a weekly basis. If we look more recently, looking at the last 200 or so days within the market, you can also see that we had a high in May of this year, 2011, all the way down here into a low point in August of just a shade over 1100, and our high was all the way up here in the 1300 range. You can see, in fact, 1370 was our high. So we had another substantial drawdown, fairly short order, and from peak to trough, tremendous range in a short time as far as number of months here. We're talking about 4.5 months, and our retracement at 50% and the same ratios. Well, again, notice we go right down here to a Fibonacci area and start finding our way back up, and that's the moving average. But look at these peaks and valleys. They're really setting up within this channel. As we get back and look over the last few months, we see our peak right here that occurred in July, our trough that was here in early August, and again, right up here we start to just dance around in this channel. And we're really set up in a fairly tight, or fairly broad rather, trading channel. Same is true even looking just through the month of September. So peak of the market, trough of the market, and in here what I've shown is we came up, rounded the corner, and then we've gone right back up into this resistance area. And the question is, does the market want to drift back up higher or not? There's not a lot of tremendous positive news out there as Europe is struggling and the banking sector is struggling, but we still find that a lot of traders in thin volume have been moving this market in dramatic fashion. So big moves one day or the other, and people ask, well, why does it move so far, and how does it seem to set up these instances? Well, I found it very interesting that here we went right back down to our Fibonacci, just a shade below it, and then finished up, but still pulling right back down. Look at the moving average, the way it just settled right in that area. So very fascinating to me. When we look at, let's go ahead and take a look at all of these laid on top of each other, and you can see here was the last week. So in the context of about a month or so of data, how many of these different retracement areas have shown up? We can see this was our hourly chart, our daily chart, and our weekly charts, and they're all right within this section here. So it seems to me that we've got a number of different trading systems that are colliding simultaneously. I suspect that's part of what's generated so much volatility is that with traders and hedge funds and high-frequency trading contributing so much to market movement right now, and a lot of longer-term investors either sitting on the sideline or doing nothing, then the change in price seems to be happening systemically the way we would expect following a lot of these resistance and support levels. So I find it fascinating. It's really not a commentary so much on where the market is headed as is. I find it interesting to look at the number of places that the market seems to be lining up, and all these different retracement layers on top of each other that are so close. If if I were to look at the coming week, I would say probably somewhere in this bandwidth right here is that I would extend out, just anticipating that we'd continue to trade looking for some kind of resistance or support. And on a shorter term basis, I would look at something similar in this range. We're on the high side, so probably the low side here at about 1185 or so, and then the high side could be all the way up here into the 1230 range. So very dramatic range that we're experiencing here. Makes predicting the market, not that predicting is ever easy, but it's all the more challenging now. So stay focused and continue to watch as things unfold here. For those of you that are not using a trading system and process, I would encourage you consider that, because if you're allowing your emotion to be the gauge of these markets right now, odds are it's going to nip you, because emotion has not been a very good way to track this. You feel terrible down here and you want to sell. You think things are going to be okay up here, and you want to sell when, or then you want to buy, and then it's going back down. So really, really challenging. So certainly look for a process rather than using your emotion as your judge. So this has been a recap. All the best. Thanks.